Okay, welcome back to the channel, guys, and welcome to part 2 of the Bullseye Accumulate to Distribute strategy. So in the first episode, just as a recap, we went over how you apply levels to your charts, what platforms it is that you're going to need. So you've got your exchange and you've also got your trading platform. We've applied the horizontal ray to our level, our 50% level using the Fibonacci tool. We've applied our resistance and our support levels, and we've highlighted them to show that they're above our 50% level or below our 50% level. And this episode, we're going to be going over the risk management and the rules. So stay tuned and let's get straight into it. Right, okay, risk management and rules. We'll go over the rule set later on in the episode, so stay tuned for that. We'll talk a little bit about risk management first, and I'm just going to use a simple example of if you've got a $10,000 portfolio and you're willing to put an allocated amount of capital towards this strategy, you shouldn't be putting all your $10,000 into this strategy, and you should have first and foremost researched this project, and whatever it is that you're doing, have the confidence that it's had enough data in the past and it's got enough fundamentals to last for the future. So I wouldn't recommend using this on medium caps or altcoin caps, small cap altcoins. I'm using it on Bitcoin because that's the one that I trust the most, and that's the one that I'm most familiar with. It's the one that's got the most data, and it's just the one that I'm using in this example. So we've applied our support and resistance levels, and this is really important in this strategy. And the reason for this is because we're going to be laddering out at certain levels of resistance, and we're going to be laddering it in at certain levels of support, which is going to be above or below the 50% level that we've applied to our charts already from episode 1. So just as an example, don't put your eggs in one basket. If you've got a $10,000 portfolio and we're looking at the first level of support below the 50% level, and you put $10,000 in here, ultimately, you've missed this support zone here. That would have created opportunity. You've missed this support zone here. That would have created opportunity. We've come back and we've retested this as support, and that would have created opportunity. So what I suggest, and something that I do myself, and none of this is financial advice, but something that I do myself, is I'll allocate, say, 10% of my maximum portfolio to this strategy and to this token. I'd put that separately in a separate exchange so I can look at the back-tested data as to how it's performing and how I'm accumulating over a period of time. So I treat it completely separate. Each strategy is completely separate to me. And if I'm allocating 10% of a $10,000 portfolio maximum, that means I've got $1,000. So it works twofold. If you put your $1,000 in at these levels, that's not going to work because ultimately you've missed the gains here again at support, and here again at support, and here again at support. So how do we overcome that? That's what I'm going to teach you in this video, and that's what we're going to go over next, guys. Okay, this is an important part that I was telling you about in the first episode. This is where we're going to calculate how much we're going to take out from a distribution and how much we're going to take out from how much we're going to add in an accumulation. So if we add in our percentages now, which if you just go on to your trading view chart and go into text, you can just add these in now. And what I'm going to do on Bitcoin is the first level is going to be 10% for me. So I'll add in 10% for the first level, and I'm just incrementally going to increase this all the way up, and the same for all the way down. So that's going to be 10% for me. What I'll do is I'll finish this off and we'll be back in a sec. Okay, you can probably see things a little bit clearer now, and I hope this all makes sense to you. So we've got the 50% level, we've got our middle line, which is going to be the important line for us, and we're not allowed to, of course, buy above this line, and we're not allowed to sell below this line. So accumulation phase below the 50% and distribution above the 50%. We've added in our percentages. You add in your percentages, whatever works for you. But ultimately what we're doing is we're trying to accumulate percentages at these percentages of our maximum portfolio. So of our example, if we've got 10% allocation of our maximum 10,000 portfolio, we've got £1,000 to play with in this strategy. So I would, and it's not financial advice, put $1,000 or pounds or whatever it is that you're using into an exchange so you can keep track of how well it's performing. So you've got the 1,000 separately, and just an example, if we broke this line here and hit our first support zone, 10% of our 1,000, which would be $100, would go into this. If it's broke this support and gone back into there, remember we've only got $900 left. So we're putting 15% of $900 into this as an accumulation, only if the stochastic RSI is at an oversold level. So that's the other thing. We're going to go over the rules next. And then it's dropped another zone, so you can hit 20% there. And you'll see by the rules, the next time that it bounces back up and hits this level, we can only take 10%. And we'll tell you why that's in the rule set in a minute. So that's what the chart's looking like once it's finally done. So get your charts up, replicate that, replicate what it is on yours, and don't forget to do your own testing. And we'll have a look at the rules now. Okay, this is the last part of the video now, guys, and one of the most important ones. I've saved it to the end, but in the next video, we're going to go through the practical application, how you do it in real time, and what levels to look out for in the coming weeks and months on the chart. So rule number 1 is never sell below the 50% level. Rule number 2, never buy above the 50% level. Number 3 is add in your percentage levels for buying and taking profits. We've already done that on the charts. And remember, it's the weekly support and resistance levels that we've applied to the charts, and we're using the daily time frame for trading. So only buy support at oversold stochastic RSI. So we added our stochastic, remember, in the first video. So adding your stochastics, we amended ours to 70 and 30. So you're only buying support at oversold stochastic RSI. You're only buying, or you're only selling resistance at an overbought stochastic RSI, and that's rule number 6. Rule number 7, if price accumulates at a level of structure more than once, reduce your allocation by 50% each time. And you remember what I showed you on the chart. If it hits once, you allocate it by your percentage. If it hits again, you reduce that by 50%. If it hits again, you reduce it by 50% until ultimately it breaks through a major level of support and resistance. So by doing that, it means that you're not going to exhaust all your capital in one area. If it goes down in price, then you're going to be able to take advantage of the lower levels because you're reducing your allocation, and that's part of the good risk management. So number 8, if price distributes at a level of resistance more than once, reduce your allocation by 50% each time. So that's just the opposite of number 7. And finally, each time price makes a new high, you need to add in your new resistance level. So if it makes a new high on a weekly time frame, add in a new weekly resistance level. And then, of course, if that happens, you need to adjust your Fibonacci and add in your 50% level, because that's going to ultimately change once a new high is being made. So those are the rules, guys. Hope you enjoyed the episode. Don't forget, episode 3 is coming out soon. Keep your eyes peeled for that. Hit the notification bell and you'll be notified when episode 3 comes out. If you have liked it, give us a like, share the content with your friends. Appreciate you all, guys. Enjoy the rest of your week.